As somebody who trades prop firms quite regularly, and I get many payouts from prop firms, and even over the past few years, I've had 6 figures plus in prop firm payouts. And I do believe they are the best way to make money as a trader, especially if you are in the situation where you don't have a lot of personal capital. If you don't have 6 figures to trade with personal cash, then it can be quite difficult to actually make a living from trading. But with prop firms, it does give you that opportunity to trade larger capital, to then use that capital to invest in maybe your own personal account or in other investments. But I'm here to tell you that it's not all positives when it does come to prop firms. I'm going to give you the negatives and the downsides to prop firms in this video. I'm not trying to convince you to not trade with prop firms, because I still believe they are a great thing that's been added to the industry in the past few years. But you have to be aware of the negatives to fully understand what you're getting yourself into when you are trading with them. And it also might make you consider the differences between personal capital and prop firm capital, and you'll see it more clearly. But before we do start the video, if you do want to get payouts like this that I have received over the past few years, and also members in my mentorship have had these payouts, be sure to check out the link in the description to the mentorship, and you can learn exactly how I trade and how the mentorship students trade too, and you can get those prop firm payouts and make tens of thousands like all of us are in the group. So the first point is that you are not trading your own capital. So if you have £100,000 in cash in your trading account, you have access to that £100,000. Let's say I needed some money as an emergency. I needed to buy a new car. I needed to fix something. I can withdraw that money, and within 1 or 2 days, that money is in my bank account. And then I can use that money to fix whatever needed fixing. Or maybe you lost your job and you need the money to pay your bills and your usual household expenses. Again, you can get access to that money relatively easily and quickly. Whereas with a prop firm account, if you're trading with $100,000, you can't access that money. You will never see that $100,000 because it's not real. It's demo money. You don't have access to it. So it doesn't really help you in any way to be funded 100K or 200K even. It doesn't really affect your life in any way, because you're only getting paid a percentage of the profits above that 100K. So if you're not above that, then you're not seeing any of it. Whereas with a personal account, you get to see every single penny of that. If you make profit, you keep 100% obviously, and you get the 100K too. So you have a lot more freedom in that aspect. And this is why I find it quite interesting when traders will come out and say they're trading with 7 figures. You're trading with 7 figures, but you don't get access to 7 figures. You will never see those 7 figures unless you make a gain of over 7 figures on the account. Whereas someone who is trading 7 figures of personal capital, live funds, they do have access to that money. So therefore, they are in control of the money, they are in control of their own trading, and they don't have to stick to very strict prop firm rules. And that is the next point. Personal trading, you don't have rules, or you don't have predetermined rules. You should obviously set your own rules in your trading plan based on your backtested data and your trading strategy. But these rules are going to be there to help you trade, to help you become as profitable as possible. Whereas prop firms, these rules can sometimes be placed there to stop you making lots of money. Notably, minimum trading days or consistency rules or certain news trading rules. These can be put in place to stop you making money so they don't have to pay you out. Whereas on your personal capital, you technically have full freedom to trade exactly how you want to trade. So this can make it easier for a lot of traders. And I definitely think trading with personal capital is a positive for some people, but a negative for certain other people. Having rules in place can help some traders who are bad at sticking to their own rules. If they don't have any consequences for them breaking their rules, then they're probably not going to feel the need to stick to the rules. And this is the case with personal capital for the majority of traders. And this is why such a high percentage of people actually lose money, because the only consequence is they lose their own money. And if you only put money you can afford to lose into the trading account, it doesn't really feel that bad for most people. Whereas if you are trading a prop firm and you have these rules that are set by the company, if you break these rules and you're on the funded stage, you then have to go through phase 1, you have to go through phase 2, you have to do the whole process again, whilst also paying the challenge fee again, just to be given the opportunity to trade and make profits again. So you are punished for making mistakes. You are punished for breaking the rules, which I think is actually a good thing. And people who don't like that aspect of it are probably the people who can't stick to the rules. Because if you can't stick to the rules, then you should expect to get payouts rejected. You should expect to actually blow the accounts because the rules are there for a reason. I do agree that some rules can be quite deceiving and it can be there to basically make you stop making money. But overall, I feel like it can help a lot of traders, especially with their discipline. And one major downside to trading with prop firms is the market conditions are not very good. When I'm speaking about market conditions, I'm comparing personal accounts that I've used with FCA regulated brokers versus prop firms that I've actually used over the past few years. And the executions are usually quite poor, especially with market executions. Limits, they tend to be better, but still you don't really get perfect executions, which I'm used to on my personal accounts. You also have to contend with fairly large spread a lot of the times. The spread isn't ideal. I've only had 1 or 2 prop firms in the past that have had really good spread and really, really good trading conditions, but unfortunately those firms are no longer around. So I can't give you a positive review and say go trade with these firms because they're no longer around. Perhaps giving traders really good trading conditions does lead to a lack of liquidity in the long run, if you get what I'm saying. And you also have to deal with the slippage. Slippage can be a real disaster for a lot of traders who aren't expecting it because they'll calculate their risk based on their max or average losing streak. And then let's say an average win, you make 3%, oh, it seems great. You don't get really good slippage on a win, conveniently. But then when you are actually losing a trade and you're risking $1,000, let's say, and you lose 1.1K or 1.2K, it doesn't seem like a great deal, but an extra 0.1, an extra 0.2% per trade, over 5 trades, you're losing an extra 0.5 to 1%. And that is quite a large amount when you only have a 10% max drawdown or a 5% daily drawdown. That can build up quite significantly and quite quickly. And you can be left with a very, very tight drawdown allowed that you then have to somehow navigate your way out of. Another downside for a lot of traders who don't make massive returns on their yearly profits, you have to make high profits to make any money with prop firms. I'm not saying you need to make 100%, 150% in a year, but just to be able to get on the funded stage to be able to make any money, you have to make 15% profit. If you're looking at returns for the average hedge fund or the best investment you can possibly make, which is the S&P 500, that only returns 8 or 9% per year, you can quite clearly see that just to be able to make profit, you have to make just shy of double what the best investment makes in 1 year. And you are likely not wanting to wait a year to pass. So a lot of people that are returning, let's say 20%, 25% in a year, they're only actually making 10% profit on their funded account. Unless you're trading with 400K or 800K, this return is not going to be significant in the slightest. I'm up 10% right now on a 100K funded account, but to actually make that $10,000, which is then only $8,000 after a profit split, I've had to make 25% profit. The 10% from phase 1, 5% from phase 2, then the additional 10% on the funded account, so 25% profit just to make 8% after the profit split. So 25% profit, which should obviously, if you're thinking about a 100K account, be 25K, and I only receive $8,000. So it can be quite deceiving. People say, oh, I make 30% in a year or 40% in a year, but you have to reduce that by the number of phases that you have to go through. So let's say you failed 2 accounts in that year, you have to retake the challenge twice, you're then losing 30% of your yearly profits. That's definitely something you have to consider, especially if your drawdown is relatively high too. If your drawdown is quite high, you have a higher chance of blowing the funded, you have a higher chance of blowing the challenges, therefore leading to more profits that you are required to make before you get any money going into your bank account. And once you have made your profits, the next point is that you have to wait for your payouts. If you make profit on a personal account, you can withdraw it 1 or 2 days like I mentioned earlier in the video. Right now, I made a trade, I think 14 or 15 days ago, and today is my payout date. So I should be receiving my money today. So it means that whole time I've had to wait for the payout. I've made my profits, and instead of just being able to withdraw my profits immediately, I've had to wait the whole time. And then once your payout has actually been requested, your account then goes inactive with a lot of the firms in the industry. So during the time that you process the payout versus the time where you receive the payout and they send it to your bank account, that could be 2 or 3 days. So over the weekend, it could possibly be 4 days. If you're including the 2 business days plus the weekend days, you can definitely add up to losing a lot of inactive times when you can't enter trades, which can be quite annoying for some people, especially if your strategy consists of trading every single day of the year. you might miss out on a lot of your profitable days just by having an inactive account that you are no longer able to trade and make profits on. And even if you have passed a 100K or 200K, with each firm, there's usually a finite amount of capital that you're able to trade with. Some firms will be 400K, some will be 800K, some will even scale you up to 2 million. But it is finite. No matter what the number is, it's usually finite. So it's not like me trading my personal account, there's no limit on what I can scale my capital to. If I start with 100K, hypothetically speaking, I could trade that to 10 million. I'm not saying that's likely. It's very unlikely for that to happen, probably 0.0001% chance that actually happens, but it is a possibility. Whereas with a prop firm account, that is not going to happen. And you have to accept this, that no matter how much you actually trade, you'll never be able to compound your profits to actually make more. So usually trading with a 100K personal account, you get it to 110K, you might be able to increase your risk slightly to then make 1% or 2% or 3% of that 110K now. And then you do this over the long term, and if you use the compound interest calculator, I know it's not going to be super realistic, but it can definitely transform a small investment into a large investment over the long term. But with prop firms, you withdraw your profit every 2 weeks or every month, and then that goes into your bank account. And you could obviously use the profits to compound, but you're not getting the same results because you're not compounding with the initial 100K. So that's definitely something to consider. If you are going to trade with prop firms and compounding and growing an account long term is your aim, then perhaps move your profits to a personal account or investment accounts so you are able to grow your investment portfolio and not just leave it in prop firms to try and grow there. So if you've had any experiences with prop firms, good or bad, let me know in the comments and I will check them and see what you guys have been experiencing, and I'll catch you guys in the next video.